From the Land-Grant University in Urbana-Champaign, Illinois, this is the Closing Market Report. It is the 31st day of October, 2025. Coming up, we'll talk about the commodity markets with Mike Zuzolo at globalcomresearch.com, and Eric Snodgrass will join us to take a look at the weather forecast. If you can stay with us for the whole of the hour, you will hear all of our Commodity Week program recorded yesterday afternoon with Dave Chatterton, Kurt Kimmel, and Matt Bennett. Otherwise, it's up online at willag.org, and many of these radio stations will carry it over the weekend. December corn for the day at $4.31 a penny and a quarter higher. The March at $4.44, a quarter higher, and the May futures unchanged today at $4.52 and a quarter. November soybeans $10.99 and three quarters, up 8.5 cents. The January $11.15 and a quarter, 7.5 higher, and the March contract at $11.23 and three quarters, up 8. December bean meal $3.21.60, up $6 for the day, and the bean oil at $48.68, down 97 cents. Soft red winter wheat at $5.24.5, 11.5 higher. The hard red winter in the December at $5.61, down 4.5 cents for the day. Live cattle futures in Chicago finished the nearby $1.42.5 lower. Feeders were down $2.32.5, and lean hogs up 45 cents. Mike Zuzolo, globalcomresearch.com, out of Atchison, Kansas, now joins us to take a look at the marketplace. Hello, Mike. Thanks for being with us again.
Great to be with you, Todd. Happy Friday. Happy Halloween, I guess, and happy everything else, right?
Well, happy everything else. Happy trade deal, I suppose. Let's start there. On soybeans for the week, what was the action like? And we'll get to the deal itself, but what was the action like? How did the market react, and how did you see that unfold?
You know, I have to say I was caught way off guard when I did my monthly updates for prices as we closed out the month of October, and I updated my charts and my spreadsheets, and I looked and I saw soy meal up 22%. And so price action heavily surrounded and revolved around the meal price action strength against the bean oil weakness. And then also, I would argue, again, based upon how we did over the week with corn and wheat both up about 3%, 3.5%, beans going to be up about 9%. We had the support of the wheat and the corn, especially the wheat, as we got on the second part of the week. In fact, the meal and the wheat were the two that made the new highs first on Friday. Corn and beans then joined them. So I would say price action was what we've been used to, except I did not see that meal market rallying. I mean, I think we went from 260 something to 327, 325. It was a very strong monthly move in meal. And I'm guessing part of it was the Asian trade deals that we got from other countries other than just China. But I got to think that maybe we did some good with Argentina and their currency strengthening as well. Because whenever we see meal rally like this, typically Argentina is one of some factors in that, Todd.
All right, so now let's talk a little bit about the trade deal that was struck between President Xi and Trump. 12 million metric tons between now and January. I suppose that's it for the year, for this marketing year, I think. And then 25 million metric tons for the following three marketing years, 26, 27, 28 crops. What do you think of that, and what are you telling your producers?
Yeah, I will say, first of all, I had low expectations of any kind of a specific deal. So in that respect, it was very welcome news. And I think it took the eyes of the trade off of demand concerns, and we can return once again to supply concerns. So that's kind of where what happened and what I'm telling clients kind of begins, Todd. And what I mean by that is the 12 million metric tons is all I'm going to focus on right now, with 10 months left in the 25-26 marketing year. USDA of the total exports, and I'm going to go to million metric tons here because we're talking million metric tons, of the total exports last year's marketing year, China took about 26.8 million tons. This year, USDA, as of the last report before the shutdown, China was going to take about 23.5 million metric tons, using 51% of the total. And so you're talking about 3.3 roughly million metric tons different. And so what that says to me is the USDA was not clobbering demand, export demand. They were taking it step by step by step by step. So that means we don't have to push a lot of demand back into the supply demand balance sheets because USDA didn't take it out. And that, I think, goes to the point about the supply side versus demand side. I think maybe if this market continues higher, it's going to be because of we have the support of the crude and the wheat. And also, I think because the market's going to go back to what's our yield? And if we lose a bushel and a half on yield, we could be at a 175 carryover. And I think that maybe is what started to develop after we got all the news coming out of China and South Korea.
So, what are your expectations if the supply and demand budgets, WASI figures are correct, or pretty close at this point? What had the trade been figuring that at, as opposed to what USDA had, and have we built now, after a few days of trade, built everything back into the marketplace that might be what little changes?
I think we're on our way to cutting the carryover at this point because I don't think we need to change much on the demand, as I said. And I think these other Asian trade deals also help the product markets, both meal and biofuel. And so all of a sudden we've got demand supportive instead of demand fear. And so if that's the case, and we take a bushel and a half off of the carryover or off of the yield, that and we get to a 175 carryover, my model would suggest that gets you to about 1165, 1175 in front end beans this time of year, because we're in between weather markets. We don't have a weather market now in the United States. We're not quite ripe for a weather market in South America. But I do think that the South American weather market is way back in play again because of this week's price action and also what we got out of Asia, not just China, but especially Vietnam and Malaysia and some of these big poultry and livestock countries that will probably be taking fuel and processed grains from us for feed.
Wheat and corn followers in this case?
Yeah, I think so. And that's probably the most disappointing thing when it comes to the corn market this week. I'm going to lay that once again at the feet of the wheat because it wasn't until Friday that wheat was actually able to do much. It was pretty much steady on the week going into Friday morning's trade. So my mindset is that if we could get a solid foundation under wheat, we see the cash basis in corn start to improve now after this past week. And with harvest starting to wrap up, then maybe the corn fundamentals can play a little bit more friendly role. The bull spread was all over the place as far as old crop, new crop, down one day, up another. So it kind of signaled that trade wasn't really sure where it wanted to go on the corn.
Crop insurance, a done deal now. October is over. Anything that producers need to think about now that they're uncovered, roughly speaking?
Yeah, good question, because I think this is a market, as if we laid it out here today and it plays out mostly that way, it would be a cash-led market if we're losing yield, losing supply. And so I'm trying to stay mostly with paper floors underneath me, especially as we get above $11 in Nove 26 beans, do some cash sales, but I'd still stick with the front end on paper sales for this point for corn and beans, because if we really are tightening up this crop, we should, I think, see quite a bit more cash increases as opposed to what the futures does based upon what the outside markets do. And that's where the rub has been for many, many months is if crude oil goes lower, wheat goes lower, and the dollar goes higher, do the funds sell the futures, but the cash market goes the opposite direction. And last thing I'll say on that note, Todd, is we've got a potential strike by the United States on Venezuela. Also hearing that the Trump administration has okayed Tomahawks for Ukraine now. So let's watch that crude oil closely. It could actually be a mover and a shaker and support these markets for a change.
We'll let you do that, and we'll talk with you again next week, Mike.
Thank you, sir.
That's Mike Zuzolo. He's at globalcomresearch.com out of Atchison, Kansas. Let's check in on the global growing regions and weather patterns there and how they're impacting agriculture. Eric Snodgrass is here from Nutrient Ag Solutions and Agrable. Hi, Eric. Thanks for being with us. A lot of things to discuss today, but I do want to go back to earlier in the week and Hurricane Melissa. I am sure you watched this with interest. I'm wondering what your assessment of that hurricane might be.
Well, there's a famous meteorologist and atmospheric scientist named Dr. Kerry Emanuel. He's out at MIT. And a number of years ago, I mean, this guy's had a very long career. He developed a metric to gauge what the possible maximum strength of a tropical cyclone can be, given all the conditions surrounding it. And Melissa reached the peak of that. So at one point, Melissa had 185 mile an hour winds that ranks second in the Atlantic behind Hurricane Allen from 1980. So that was the sustained winds. I believe there were gusts at over 215. And then its central pressure dropped down to 892 millibars. And so for perspective, that's the same atmospheric pressure you'd feel if you climbed up, my goodness. Wow. I mean, getting on almost a mile, 6/10 of a mile, maybe. It's just incredible to think about how low the central pressure was. So then the thing hits Jamaica, and what's really interesting about this meteorologically, because the human aspect of this is terrifying and tragic and catastrophic. There's no denying that. But this is the only system that was able to both develop and then reach hurricane strength in both the Caribbean and the Gulf this year, right? Everything else was out to open ocean. We didn't have a single system get in there because the time the primary hurricane season started, which was really on August 1st, the Bermuda High slid over toward Africa, kept every system out to open ocean. And it's going to be a year that goes down to only having Chantal and Barry, both weak tropical systems, that even got close to coming into the Gulf. The Gulf had too high a wind shear, very unfavorable conditions. And then later in the season, nothing to steer it in there. But, that's the reason why we got so dry in the Midwest starting in August, right? There was nothing to pump the moisture north. And what did we see Melissa do? It went through Jamaica, into Cuba, over the Bahamas, and went right on toward Bermuda, and it's now on its way over to merry old England. So it just couldn't get the moisture to this area. So I think it's kind of an interesting story as how it ties into Midwestern dryness, which has given us these massively wide open harvest windows, even though we did get a little bit of rain recently, right? I mean, we had that rain over the weekend, which was just incredible. And it was nice to get some moisture back into the soil, but didn't break a drought by any stretch.
We are the center of the driest areas, or one of the driest areas in the nation here. What do we look like for the next week?
Dry. Sorry, but I mean, I don't have any major thing coming in. So the problem is that the jet streams dip in these huge troughs into the Gulf of Alaska. So all the action's in Washington, Oregon, or British Columbia. Then a ridge builds from California all the way to the Great Lakes, which means these systems go over the top of that ridge. They dive into the eastern Great Lakes and exit the Northeast. So other than a little weak little low that's going to try to go through Kentucky this weekend, there's just no moisture to be had in a big chunk of the central United States. So yes, we're drier, and we're even still drier going into week 2, although rainfall chances begin to improve once you get out there farther into the next week.
Anything on the rest of November?
Well, November, I think, is going to come in mild. Now, remember, it's still November, so seasonally we're getting colder, but overall, I think we're going to be mild compared to historical averages. I think that should be good for a lot of growers that still need to do their fall tillage or fall application. I think we'll have plenty of opportunity to get that done, even with the dryness. The mild weather, keeping those soil temperatures at or below 50 is pretty good versus, sometimes you can worry in late November about freezing up the top inch or two, and I don't think I see that happening. But I mean, the question will be, at what point do we turn the water back on and bring the moisture back in place? Because our top 16 inches of soil moisture currently ranks at or very near the bottom of the distribution. That goes back 50 years of data there. So I need to get the moisture in place before we get locked into winter.
I hope that doesn't come as snow. I'd like to hold that off to January. Can we have a mild December too?
I don't think so.
Maybe I hope. Oh, no.
I think the problem is going to be that there are a couple of things working against a mild December right now. And based off of some early kind of wobbles in the polar vortex, based off of some of the winds that are across the equatorial Pacific and Indian Ocean, I looked at all the times in the past when that happens, and we tend to store up some pretty cold air in the Canadian prairie in November, late November, that tends to come out in December. So whatever we think we might get for November, the chances of it carrying into December are pretty limited. So I would say colder risks, and possibly for once in a while, we might finally get some snow before Christmas. So that'll be interesting to see.
It would be interesting and great for the kids too. I hope that does happen. South America, a quick word there.
Yeah, so we're finally starting to see in the model something we've worried about, which is that parts of southern Brazil, think Rio Grande do Sul, then Paraguay, Uruguay, and Argentina have some drier risks. So that lines up well with historical analogs, with the La Nina, and now with the new forecast. But the Cerrado in the north, they're expected to see not just near normal rains, but even above normal rains, which with the speed at which they've kind of established this crop, which has been pretty good, I think it's going to be overall a wet start to their growing season down there.
Thanks much. We'll talk with you again next week.
All right, sounds good. Thanks, Todd.
Eric Snodgrass is with Nutrient Ag Solutions, and Agripol joined us on this Friday edition of the Closing Market Report that came to you from Illinois Public Media. It is public radio for the farming world, online on demand at willag.org. That's WILLAG.org.